So thank you all for coming. Thank you for showing up and learning a little bit about investing in Birmingham real estate. That's what we're going to talk about today. We'll kind of go through the big picture philosophy of investing, our view and our take on what successful real estate investing here in Birmingham looks like. We'll talk about that. We'll talk about our team a little bit and how we are approaching real estate, working with real estate investors here in Birmingham. We'll talk about neighborhoods and the market here specifically, and then we'll talk about some kind of specific strategies that we're using with clients and kind of the main things that we see in terms of, especially on the acquisition side. That's really the focus for today, is acquiring proper investment properties. So my name is Rob Drum. We'll kind of get into all that. This is basically what I just said, what we're going to cover. Why would you listen to me? This is just, I guess, some background. I started investing like the first day I was able to open a stock trading account. So I'm just kind of weird, I guess, that I don't know why. As soon as I was able to open an account, I did, and started. So summer of 2007, pretty much immediately started losing money, and through 2008, I was like invested in the stock market and went through all that, and I've pretty much been kind of involved in investments ever since. Used to trade stocks professionally for 7 years, and got into real estate about 4 years ago. And so that's kind of, I was drawn to the investing side of real estate right away. In the same kind of 4-year period, I had 3 babies, and now I've got another one coming in December. And we've done over 200 transactions. A lot of them are for my own account, and a lot are for clients who are investors. We definitely do retail work here and there. My wife has kind of taken over the retail side for people who are buying or selling homes to live in. And I really just focus on the investment listing side. We'll get to kind of how our team is set up in a minute here. So we've kind of just recently soft launched the Birmingham Investments Group. I never really wanted to start a team, but I got kind of busier and busier, and hired one person, and we got even busier, and got another, and got even busier. So that's kind of how we have launched this Birmingham Investments Group, really focused on serving people who want to invest in the Birmingham market. A lot of our clients are out of state, some even out of country. And so we really want to do that better than anyone else does it. That's our goal, is just be the market leader here in Birmingham in wealth building through real estate. And we're committed to education, which is, why we're here today. This is just me sharing my thoughts and experiences through 4 years of doing this for myself and working with dozens and dozens of clients buying and selling investment properties. And our group is committed to learning and also to passing on that knowledge and educating our clients kind of in this capacity. So I'm team lead and listings director. Jordan Holt is our acquisition specialist. If you're looking to buy a property here, like we're talking about today, he's really in charge of that. He's taken that over. It was a couple months ago. He fully took that over from me and is honestly doing a way better job than I was, because it's all he does. His only job is helping investors buy properties, and you won't find that anywhere else in Birmingham. There's not an agent who is just, as far as I know, who is just helping investors buy, and he's turning over rocks all over the city with off-market acquisitions and networking with other agents who may have listings, and getting the inside track on our listings that are coming soon, kind of coming through the pipeline. He knows what all we have, and if he knows what you're looking for, he'll hook you up. So he is doing awesome. And my wife, as I said, is doing our retail transactions. If you're going to sell a property as a kind of traditional listing, or if you're looking for a home to live in, which we don't do a lot of, but every now and then we have somebody ask us, and she's the specialist in that. Christy is my executive assistant, who kind of kicked this whole thing off because I hired her, and all of a sudden had a lot more time to commit to selling real estate, working with clients, got a lot busier. She kind of started that snowball of building Birmingham Investments Group. And so you'll have contact with her if you're working with us. Jamia Nelson also, you'll definitely have contact with. She is our transactions coordinator. Make sure all the I's are dotted, T's are crossed, paperwork's done. So today, all I really want to do is educate, just share what I know, what I've learned, my opinions, meet some new people, which I see we have a couple on here. That's awesome. Would definitely like to talk with y'all. Hopefully you'll stick around after, we can chat. And then if there's an opportunity for us to do some business, would love to do that. So, and we'll talk about, how we can do that. Why do we invest in real estate? This is kind of the core thesis and approach that we have. And it's that owning real estate has a lot of good things happening. It's like a soup of awesome returns. And it's not just one thing, it's all of these things. Appreciation is mostly linked to inflation, which right now inflation is very aggressive. We're appreciating a lot. And so we're seeing a lot of appreciation in home prices. And this is a huge driver of real estate returns right now, is just the prices are going up, which is a great source of returns for owning real estate. And over time is huge. You want to own real estate that is in demand, that is desirable for people to live in or conduct business in, or whatever, and is going to appreciate, at least with inflation, if not more. Depreciation is kind of an added benefit that we get from writing off a portion of the property that we've bought. So the IRS allows you to, actually they require you to take a percentage of the building cost of the property that you've bought and take it as a loss every year. So I don't want to get too deep into that, but that can actually be massive in terms of the benefits of owning real estate, because you take those losses, and we'll get into an example later of a 1031 exchange where this client, he bought an apartment building, he'll depreciate it, and when it's time to sell it, he'll do a 1031 exchange again, and most likely never pay taxes on the gains that he wrote off. So it's that's how real estate investors, like for example, Donald Trump, when they looked at his tax returns and he only paid $800 or whatever, that's why, is because that's one of the reasons, is depreciation. Principal pay down, if you have an amortized loan, which almost all the loans that we're getting and our clients are getting are amortized. So as you make your monthly payment on the loan, some of that goes towards principal, and you're paying that down over time. That really builds up, and eventually it's paid off. So builds equity that way. Write-offs through either repairs on the property, taxes, insurance, kind of all the expenses that you have are written off. And there can be other expenses, in a rental business. I know some of my clients write off trips to Birmingham because they're investing here, and they should, and they're allowed to in the tax code. So that's a good benefit as well. And then cash flow, which honestly, the kind of guru marketing term cash flow, people pump that up a lot, like you can retire and live off cash flow. And it's been my experience and that of people who have been in this business longer than me, that cash flow is a long-term deal. In the very beginning of owning a property, there's not a lot. And for a property, to say a property cash flows really means that it's paying for its own debt service. That's what you want. And there's not really anything left over to live on. I own a fair amount of properties and I don't live on anything that comes in on a monthly basis off of them. So this is the first transaction I ever did, and I didn't actually do it. I married into it. My wife bought this house. And I think it's an illustration of a really quality investment purchase. Even though she didn't buy it with that intention, it kind of ties in a lot of the things we're going to talk about today. And it's worked out really well for us over the last 6 years, since we kind of turned it into a investment property. So she bought it in 2012 for $159,000. That was the list price. I think she overpaid. She'll tell you she overpaid for it. And the reason we know that she overpaid is because 3 years later in 2015, we had it sold for 162 and it only appraised for 135. So it became a rental property. And that was actually a good thing. I mean, long-term, but definitely overpaid. Didn't really do that right, but it is in a really quality area. It's a great location in Bluff Park, which I would call A area all day. It's on a great street, great lot. It's a cute house is what everyone would kind of call it. She put a bare minimum down, which for house hacking, that helps your returns. Having a minimal amount of cash into the property definitely helps your return numbers. And so she actually had, when she bought this house, she used another great strategy that a lot of our clients have used. She got a roommate that paid her $500. So that roommate was paying part of her mortgage every month and paying down on her loan. And then in the last couple of years, that property's really appreciated, kind of made up for overpaying in the beginning, and it's worth $210,000 roughly now, and we have $80,000 worth of equity. So great returns from $4,000 in 2012 to $80,000 now. Really great returns. This property is expensive enough that we are able to take significant depreciation. It's definitely appreciated. We've paid down the loan, kind of all the things we just talked about. We've got expenses that really, in the end, we don't cash flow on this property, and that's okay. It's still been an incredible, like this one is not great because it doesn't even pay for itself, but it still has been great returns. We just have to put a little bit into it every year to keep it running, and that's okay with me. So let's change gears a little bit and get into what's going on in the Birmingham market. Some of y'all probably know that I do a market update every Friday on YouTube. You can sign up for my email list and we send it out, a link to it through my email list as well. And yeah, so there's some of the statistics you'll see like right here that we update them every Friday and really keep a close pulse on what's happening in the Birmingham real estate market. So Since the shutdown, we've seen drastic price appreciation. Like I mentioned, really drastic price appreciation. So 12% plus year over year is our reading every month. Really since probably August of last year. So we're just extremely strong appreciation of home prices that definitely helps rental property owners. Inventory was dropping pretty much every single week as I was doing these market updates, but about 6 or 7 weeks ago kind of bottomed out and started raising back up, and has continued to raise pretty much on a weekly basis. So we're seeing inventory start to sit on the market just a little bit longer. Next week we'll get the numbers for July and see in terms of sales and listings and prices in July, and days on market will be interesting to see what those look like on a year over year basis. Days on market is way down. We've been kind of hovering around 3 days on market as like a median, and that may have bottomed out as well. We'll see if it ticks up in July. Most properties sell again within 3 days. On some of the, like on leased investment properties, they take a little bit longer sometimes, but if they're priced well, they're going to sell very quick because there's a lot of people out there looking, and close to list price. So you definitely have to be pretty aggressive. You really, if you're making an offer 20% below the list price, probably wasting your time. And unless if it's been sitting for 40 days, you may want to try that, but otherwise that's probably not going to be worth your time. And this is new, so Birmingham has not been that hot of a market. We're seeing a lot of kind of, as realtors, we are always strategizing and reorienting ourselves to what's happening in the market, kind of keeping our finger on the pulse and seeing what strategies are working to get properties under contract, to get properties sold. And some of the things that other realtors I talk to in California or say DC, some of their type of ways of operating are starting to trickle into Birmingham as we've got this hot market. But you can still get away with like inspection contingencies. I've talked to some realtors in other markets where you just can't get under contract with a inspection contingency, and you can't ask a seller for any repairs or concessions after inspection. But we can still do that here for now. Our market, just in general, kind of nuances that I mention to new investors a lot, and I guess kind of you wouldn't know unless you had really studied our market. We have really limited multifamily inventory. There is some, a lot of what we have is in less desirable areas that we don't necessarily recommend that you own multifamily properties in. But we do have some that are in good areas and good buildings, and usually do a handful of those type of transactions every year. Construction costs in our market are high relative to property values. Those construction costs have definitely gone up thanks to COVID. And in our market, there's some properties that are literally, you couldn't, and this is weird for people coming from other markets, but there's some properties here that you couldn't pay me to take because it's just not, you would have to demolish the property, would cost money, and then to rebuild it would cost way more than it would be worth. And so that's kind of a nuance of our market, that construction is extremely expensive. Putting $40,000 into a property that it needs just may not pay off on a property that's only worth $50,000 when you're done. So it's very difficult to finance properties in that $50,000 price range. We really try to stay away from those our kind of bread and butter really at this point is over 100,000 is the point where you get into some better areas, better homes, kind of have a smoother ride, and you're able to get financing very easily from lenders for investment properties. Another thing, closer to downtown is not necessarily better in Birmingham. I know some cities that's like the rule of thumb. The closer you are to city center, the better. And that's not really true here, but that is starting to change. There's some urban areas that are renewing, and Birmingham is still an extremely affordable place. I think because of that, we've really benefited from COVID, because people who can now live wherever they want look at this and say, wow, we can live in this really affordable place. And there's a lot of good things going on in terms of culture, restaurants and venues and different things like that here. Clients who come from out of state to visit here, a lot of times, I mean, almost every time they say, oh, I could see myself living here. And I've actually got a client right now who I sold his investment properties earlier this year, and now he's found himself moving here. So I'm helping him buy a house to live in here. So A, B, and C neighborhoods, this is kind of how we look at the market. Again, A and B is our bread and butter. Would highly recommend, especially for a first purchase, sticking to these areas. And this chart, I really need to update it. This was done probably about 7 or 8 months ago, and with prices going up so quickly, I would say we probably need to adjust this. A and B areas, so A areas really much newer homes. A lot of these are going to be, even built after 2000, you'll have lower maintenance. You'll probably have a professional type of tenant paying your rent. You don't really have to worry about evictions that much in these type of neighborhoods. Don't really have to worry about the street that you're on. Just really not a lot to worry about with those type of properties, which is really what you want. It's hard to lose when you own that type of property. B areas, I'd really say these are closer to the 80-90 range at a minimum now. They're a little bit older. I do see them get vandalized. Somebody will steal a HVAC unit on a renovation project in these areas every now and then. Probably going to be market rate tenant, but they may be maybe Section 8. There's definitely, I'd say maybe 15 or 20% Section 8 in B area rentals. And you don't really have to qualify the street. There's a bad one here and there, but for the most part, any street is going to be pretty good in these areas. In the C areas, you really want to be careful on the street that you're on and the neighborhood and the surrounding homes. There's a good chance you'll have Section 8 tenant. I'd say 40 or 50% chance your house is a liability if it's vacant, because there's a high chance of vandalism. I own some C properties, and when they're vacant, I don't sleep as well, because I know it's kind of a sitting target. That HVAC unit sitting out there is just a liability for me. So I would say C areas, if you're going to buy them, you want to buy a package of a couple of them, and that way, because you're going to have more turbulence, you're going to have more risks, you're going to have more things that can go wrong. And if it's only on one property, hopefully, then 1 out of, let's say, 6, you're going to be a lot less angry than if you only own one and it's in trouble. Going to give you a bad taste in your mouth for investing and for Birmingham. And I've seen it, especially as I've really focused on the listing side of the business. I see people selling those properties that in some cases they overpaid for them and are now, just now able to sell and have not had a good experience here. So I don't want that for any of y'all. These are just kind of some areas that we see a lot of appreciation in right now: Irondale, Crestwood, Avondale, Leeds, I'd say Alabaster also, Helena even are areas that our clients are buying quality properties. Roebuck Springs, Centerpoint and Hueytown have definitely kind of come back strong on the appreciation side. More homeowners, owner occupants are buying those areas, and they got hit hard by 2008, but they're really coming back strong now. These are some of the areas I mentioned that are close to downtown, the kind of pockets of gentrification we're seeing. And so those, we don't do a whole lot in these areas, but it's good to know what's going on there. Every now and then we will help clients buy a property in these areas. So again, I'd highly recommend the A and B areas. Our philosophy is really about not losing money, and first and foremost, protecting the money that you have. And I've seen clients, I've been doing this I'm on my 5th year now, and I've seen my clients that have done really well. I've seen some clients that none of mine have done bad, but they haven't done as well. And I've seen people that have come to me to sell who have had a horrible experience. And I've seen what can lose you money, and owning the lower end properties can lose you money. Trusting a contractor to do a renovation, like a major renovation, can lose you money, I guess. So we try to avoid that as much as possible. I'd say a minimum rent of $1,000 is really what you're looking for. And we're doing a kind of a research study with our preferred property manager, just looking at the numbers and comparing performance on properties that are a little higher on the rental amount versus lower on the monthly rental amount. And I'd say if I was investing, say, $50,000, I would absolutely buy one house in Alabaster or Leeds or Helena, versus spending that $50,000 on one house in Inslee for cash. Even if, let's say, it's worth $65,000, $70,000 and you can get it for $50,000, I'd still take the one in Alabaster, just because of what I've seen from clients and their performance and their experience in our market. And again, C areas, if you're buying a package, it can make sense. But and especially, we have our clients that buy C areas are paying cash. Like, they may buy 2 a month and pay cash for all of them. And, after a year, they may get a loan and go back and do it again. And that's their model. It's definitely not, it's very cash intensive. It's difficult to get loans on these properties, especially if you're out of state. So in general, better to just ignore that segment of our market. And again, if you want, I would define cash flow as the property's paying for its own debt service. It's a beautiful thing. You get all the benefits of owning properties. So strategies, just going to go through a couple real quick here. Turnkey, house hacking, 1031 exchange. Turnkey is just properties that are rent ready or already rented. And you can do this A, B, and C neighborhoods. C neighborhoods, I would only buy turnkey rent-ready properties because it costs so much to do construction. So if you're buying a $65,000 house and it needs $20,000, it's just the only way I like to buy C neighborhoods. And when you're doing that construction, you have vandalism risk. So back to kind of what I was saying. You want to have a plan for management in place at closing. We definitely are big on that. We're going to want to know, I mean, if you're our preferred property manager that manages our properties and almost all of our clients, if you're using them, we can help with the transition. If you're using somebody else, we can help with that also. But you just definitely want to know. Don't want to go into closing and not know what the next step is. I would say buying from homeowners is a good way to find turnkeys. Newer construction, love those. One of the examples we use is newer construction, and being able to finance everything up front is big. This is one in what I would call a B area. This is probably about a year ago. So it'd be tough to find these numbers now in this area, but I would say renting for $900 per month. These numbers are pretty representative. You would probably be closer to 90 for a $900 per month rent. You'd probably be closer to 90, 94 in the 90 to 95 range on a purchase price for a property like this in Roebuck. But if you take the cash flow, estimated cash flow, estimated appreciation, add those up and, look at that relative to what you put down on the property, which is about 16, 17,000. You get a 24% rate of return just on cash flow and appreciation. That doesn't really take into account your other methods of return, but that's just like a quick and dirty math. And honestly, I know some of my clients start out using spreadsheets and to get a feel for it, and that's fine, but this does not work out like the spreadsheet. It does not work out like this. It's a lot messier. Owning rental properties is a lot messier than the spreadsheet or even than this, but they are absolutely the best way to build wealth and net worth over time, because they're incredible, but it doesn't really work out like the spreadsheet. And this is another one. This is the one that's newer construction. It's in Moody, which is a great hot area. Bought for $200,000, 40,000 down payment, rented for $1,450. I think you can still find roughly these numbers in an A area. These are really competitive. This spring, I would say from April until probably now, we had a tough time finding anything in these areas, but I think in the next month or two, it'll kind of loosen up and we'll be able to find these type of properties again. We're just competing with so many homeowners and so many multiple offer situations that we just had a tough time finding these, but they really work out well, especially, if you're kind of targeting a little higher appreciation type area. That plays into the way you would estimate it. And by the way, since buying both of these properties, how we estimated appreciation, again, I told you we're at 12% on average. So both of these have appreciated way more than this model would accommodate for, and therefore these return on cash invested are actually way higher than what we're saying here. So and really, in both cases, not much of it is cash flow, and if you have to repaint when a tenant moves out, that pretty much eats up your cash flow there. But that's part of it, part of why it doesn't work out like the spreadsheet. But all this appreciation, pay down, depreciation, all the beautiful mix of returns in real estate does still play out. House hacking. This is kind of like I mentioned with my wife's purchase, that using your primary residence as an investment in some form or fashion. It's a really good way to get started. There's a lot of different ways you can do it. Could be like a flip focus or more of a rental type focus. Works anywhere that you want to live. honestly, because you can rent out a bedroom. It just takes a little bit of sacrifice, a little bit of creativity. One quick example. These clients have done this a couple times where they've bought a property that needed work, lived in it for 2 years. After 2 years, you can avoid the capital gains tax. So they, live in it, invested. I mean, they did a lot of the work themselves, so their only costs really were materials. This is in Southside Glen Iris, which is a really fast appreciating area. They bought, just the perfect area for them to buy at the perfect time. And the house definitely needed work when they bought it, but they did a lot of work themselves. And when it was time to sell, we actually listed it for $225 and had tons of showings first day, 7 or 8 offers, and had one that they went ahead and did their inspection, and they were at $25,000 over the list price. So they got a great sale price on it. And again, they've done this multiple times and honestly have probably made more from doing this than their day jobs, which is awesome. Another example, this is a really cool one and something we've done a good bit of this year because of the appreciation in other markets. And we've got clients who maybe they own a home in Seattle or somewhere in California or Denver even. We are seeing, they may have a sale of a home, maybe an old primary residence, maybe an investment property, but they may have 100, 200, 300,000 of gains that they don't want to pay tax on. They want to move on up to a bigger property. And that's what this client had. He had a home in Seattle that he sold and it appreciated a lot. And he didn't want to pay taxes on the gains. So the IRS has a rule that there's a couple really easy, boxes to check to execute this, but he initiated a 1031 exchange and had his property sold and asked us to help him find something to buy as an investment property. And he actually already owned an apartment building here in Birmingham. I helped him buy a year ago. And so we were just we looked at some single family portfolios, and then finally this was under contract and fell out of contract and took a look at it and really just fit perfectly. It's a 20-unit apartment building in Center Point, which is definitely a B area. It's one of those areas that's really coming back well. So we went through inspections and it was just a well-maintained, kind of the perfect turnkey type of apartment purchase. 1.15 million was the purchase price. I think it was 20% down that he brought as a down payment. Most of that came from the sale of his home that he avoided paying taxes on, bought this property, and there's about 75,000 of annual net operating income after expenses that he's using to pay down the loan. I think he has maybe 8,000 or so left over after debt service and his other costs. But that's a really solid purchase. This will be a great one for him for the next couple years, I think. So how can we work together? This is really as we've kind of formed our Birmingham Investments Group team and talked about what's important to us. Education is the first thing that we're committed to. That's why I'm here right now on a Friday talking to y'all and sharing, our take on the Birmingham real estate market and what we've learned. We're committed to that, and I think you'll see that in working with us. We are investors ourselves, and so kind of having skin in the game, using the vendors that we use, kind of letting you piggyback on our experience is important to us. And then expertise. I think we've got some local knowledge of neighborhoods that a lot of agents in our market are not focused on these neighborhoods. They're not focused on this product type. And so we have some expertise that I think is kind of rare, and we're happy to help you and happy to use that for your wealth building and betterment. So if you want to, if you think we might be a good fit to work together, you can go to calendly.com/RobDrum and set up a call with us. If you're looking to buy, it'll be with Jordan Holt. He's our acquisition specialist. That's all he does, again, is helping clients buy investment properties here in Birmingham, and he will definitely hook you up and take care of you. So thank you all for watching today, and we'll kind of open it up for questions.